Now, my final question, why should investors consider your trust now? What is your long-term view for your trust? And I am going to kick off with Jules.
Sure. Our long-term view is, again, extremely positive for European small caps. If you look at the past 30 years, all benchmark have delivered outstanding returns. So if you invested 30 years ago in the benchmark, you would have made 10 times your money, which is one of the best performing asset class out there. And the reason for this outperformance is actually very simple. Small companies are able to grow their earnings 2 to 3% faster than large caps. And that makes a huge difference when you compound that over the long term. On top of that, this is an asset class where there are still opportunities for alpha creation. The small cap market segment is very inefficient. There are many stocks that we look at that don't have any research coverage. This means we're still able to find these hidden gems that investors are overlooking, and they can be really exceptional companies. So our daily job is really to find these exceptional stocks. To find these stocks, we use a very established process, very structured. We have used this investment process for more than 30 years now. The trust has been created in the early 90s and has an exceptional track record. So not only are you investing in an exceptional asset class, but you're also investing alongside an experienced team, which has proven to be able to outperform the market.
Thank you so much, Jules. That performance of that index is really strong over 30 years. Marcel, from a larger company's perspective, why should investors consider your trust now? What's your long-term view for European larger companies that you own?
Yeah, so it's interesting if you look also at the 30 years that we've been running the trust, 30 years or so. We've been able to handsomely, by kind of 400 basis points, outperform the index. And then something that surprises a lot of viewers is actually our index, the MSCI Europe ex UK, has roughly kept up pace with the world. And so I think the key few points that I would like to make is, firstly, it's not a graveyard index, as you can see, if it kept up pace with the world over the last 30 years. And then secondly, it's actually a great stock picking index. There's much more dispersion, in my humble opinion, between the best companies and the worst companies than you will find in the US, for example, or in many other markets. So if you can find those champions, as we've done over the last 30 years, and 3 and 5 years are healthy too, then it's a great index to be in. And that's usually where I would have kind of ended off my answer. But I think interestingly now is, over the last 20-30 years, Europe has been able to keep up pace with the world, despite the fact that European macroeconomy was pretty weak, to put it mildly, over that time period. So keeping up pace with the world with one arm tied behind your back, given that 30% or so of MSCI Europe's revenues come from domestic focus, is pretty good going, and if we get a world where over the next, 5 years, 10 years, let alone 30 years, that 33% comes to the table too, then, I think we could be looking even better, hopefully, over the next 30 years.
Well, that is very exciting and positive to hear. Let's hope that happens over the next 30 years. Now, Jules, why should investors consider your trust now? What's your long-term view? Again, you in European smaller companies.
Yes, well, we own some really amazing, great businesses. They are resilient, they're profitable, and they're growing. And the best time to own those kind of businesses, or to buy those kind of businesses, is actually when they're slightly out of favor. And if there's one place that's been out of favor for the last few years, it's been small cap, and certainly the quality growth end of that small cap spectrum as well. So we've seen a major derating in small caps. They have underperformed, but predominantly due to a change in their PE multiple, or the price people are willing to pay for them. Now they sit at a double-digit discount to larger companies. They're attracting interest from private equity and indeed trade buyers, as we talked about earlier. And so it sets up a pretty attractive forward outlook, in our view. I think specifically to the Montanaro European Smaller Companies Trust, I'd also just highlight a couple of recent board actions whereby the board have taken on a more proactive and aggressive buyback policy, as well as half-yearly tender offers to shareholders, which we hope might help to improve both the liquidity and the stability of the discount.
Thank you so much, George. I'm always very keen to hear what the independent board of directors are doing. Obviously, they're a major advantage of investment trust structure, having that independent board to oversee the fund manager. I'd very much like to thank our managers for joining us today. It's been great to hear their views. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. Thank you so much for watching.